Okay, so let's speak about gold and how do we take actually this monthly target. So the first thing, how do we understand what is the direction in the market? First of all, it's pretty simple. The market has created this W formation. Second of all, the market is clearly overextended to the upside. And we only got one red candle to the downside. And the red candle didn't actually retrace at least 38.2. And we know that the market is supposed to retrace at least 38.2. So taking our Fibonacci from the low to the high, our monthly target is just taken at the 38.2 of the Fibonacci taken on the previous leg, because for a simple reason, if you want information on the retracement, you need to take your Fibonacci on the impulse. Now I will bring back also the Fibonacci levels for you guys so you can read them, and we can proceed with our analysis. So as you can see, 0.382 is the area we want to see the market hit from the monthly time frame. Let's go down on the weekly and let's see what we have on the weekly. Now here on the weekly, it's pretty clear that we have a strong area of previous support, as you can see here, now turned resistance. Now how can you actually pinpoint your area of previous support turn resistance? Well, the answer is very simple. You need to go on the line chart. The line chart will give you the closes in the market, and the closes are very important levels in the market, especially weekly and monthly closes. In this way, you will have your strong area of resistance. Overall, yes, it's true. The market has basically shown a very strong rejection of the lows already with this green candle, but overall we want to see our monthly target hit. This push to the upside might actually be only a manipulation. Many long-term traders will put their stop losses below this area. We could see the market go here and then start the real push to the upside. Overall, yes, we want to see the market create a higher high both on the monthly and weekly time frame, but first we want to see the market hit the 0.382 Fibonacci on the monthly time frame before continuing the push to the upside. Going down on the daily, let's see what kind of price action we're getting. So here on the daily, we can see that we are in a little bit a contradicting scenario. Why do I say this? Because this red candle here, if we were to confirm that the market was to shift to the downside to our target, then this red candle, we expected it to close red all the way down here. However, this candle created some rejections. And why these rejections are so important to us? Because basically it means that the market was rejecting this area here, meaning that the market was creating kind of a very weird head and shoulders formation. On the other side, however, the market is still respecting the previous support, now turn resistance, because you can also see that we had previous support here, now turned resistance here. So let's try to keep charts as clean as possible. We have our overall monthly target here. We know that we have support here, and we know that we have resistance here. And we also know that if we want information on this retracement, we need to take our Fibonacci from the high to the low. And you can see that what we are rejecting is the 50% Fibonacci, and we expect continuation to the downside to our monthly target. So overall, what will be the game plan for basically gold? Let's go on the 4-hour time frame and let's see what's going on. Now on the 4 hours, you can see that overall the market is still bearish. We have previous support here on the 4-hour time frames, turned resistance now here. So previous support, turn resistance on the 4-hour time frame. So overall, we have our impulse, we have our correction, we expect continuation to the downside. So from this area, we expect continuation to the downside. So there are two ways to go for gold. Way number one, wait for the market to break this area here, because as we know from the daily time frame, this is a very strong area of support. So if the market will break below this area, then it means that we have high probabilities for the market to continue to our monthly target. Possibility number two, just take the entry here from this previous support turn resistance. This will be a higher risk entry, obviously, because the market hasn't broken the support yet, and it has created a kind of a weird head and shoulders on the daily time frame. So the second possibility is taking the entry here with a stop loss above this high and take profit at the monthly target. And in this particular case, this will be a higher probability entry. So there are two ways to go from gold, but overall we are still bearish on it, and we still want to see our monthly target hit. Now, what would invalidate this setup is if the market today went all the way up here and closed above here. At that point, we expect a slight retracement before continuation to the downside, and the market will not hit the monthly target anymore. And it's very important to always stay adaptive in the market. But at the moment, the high probabilities are for the market to continue to the downside. So that is what we have to react to. If you enjoyed this analysis, make sure you leave me a like and a comment. It really does support me, and it supports the creation of more content just like this.